Well, in that sense, you're going to have to buy 100 shares at market value, whatever price it is. Maybe it's here, right? Maybe it's here. Right? Whenever T+2 happens, you're going to have to buy at a loss. Naked call options, greed, and repeating of history. That is what's going to happen today. We are looking at April 21st, 2021, and what is going to likely happen in the next few hours. I want you to pay close attention to the DD of not only explaining what we expect to see as a pattern from the 22nd, the 19th, the 5th, and the 16th, but as well, we want you to be able to understand what is a naked call option and how did hedge funds plan to make money off of it. If you stay until the end of the video, you'll understand all of that from a little bit of whiteboarding from yours truly and from Professor Meatball doing his little magic thing. Really, I'm just working for him. So stay until the end of the video, smash that like. Let's try to get up to 1,300 likes on this video and let's begin. January 22, February 19th, March 5th, April 16th. The options available in early 2020 and why tomorrow might be ignition. This was written 11 hours ago, which means that today is tomorrow. I know, mind-blowing here. Stay with me for a moment, please. At the very least, you'll be able to, find out if this DD, the speculation that has tied innately part to making sure that this is a repeat of history, right? You'll be able to verify this right away, and out of it, you'll be able to understand what is a naked call option. So let's go down and just look at how these dates are related. What is special about these dates? Well, it's an important thing to note that these options were the only ones available to open between January and April in early 2020, which expire in the year 2021. Let's say that you are a hedge fund and it's March of 2020. Right, it's a year and a month ago. You think that GameStop is going to go under. In fact, you believe it will go bankrupt by April 16th, last Friday. Why? That's the closest date following earnings and bond maturity. COVID had just hit, and in your head, it's a done deal. They should be dead by then. You load up on your puts for April 16th, right? That's a way to bet against a stock, and then sell some naked calls to squeeze money out of suckers who buy them from you. This is very similar to a conversion when you buy a put but sell a call, and then you fund the put itself to make sure that both sides of this equation is beneficial to a person who wants negative pressure to go to the stock. What am I talking about? Well, let's open up our Epic pen to be able to show you a little bit of whiteboarding here. When you buy a sell, you are expecting, here is the price of a stock, and it goes up, and it goes down, and it goes up. What we are expecting here is to see the price of the stock dip below a certain point. So you would want the stock to go like that, right? If you are, this is the expiry date, and this is the strike price. If it ever dips below, especially if it expires outside of the strike price, then you're golden. You get to sell it at a lower price than the price of the stock. You get to sell it at a higher price than the price the stock is worth. On the other side, you want to be able to call it, right? That's very similar. A call option is to say, I want to be able to buy a stock for less than it's worth. And if you have a strike price here and an expiry date here, then that is an opportunity for you to be able to make some money when the price of the stock, this delta here, is above. Any amount of the price action that moves above here before the expiration date is going to be positive gains for you. That's a call and a put. When you buy a bunch of puts, right, you're expecting the price to go down, and at the same time, you, as a person who sells calls, don't have to expect them to actually get in the money. So in that case, you don't have to buy stocks and delta hedge if you want to stay naked on those calls, right? And that's the difference between that is when I get to this point, and for each share, I have 100 stocks that I am selling as part of this contract. I don't have to have any of this 100. I can have part of it. I can have, all of it, but I don't have to have any of it. I can buy them at market value when the person chooses to exercise them. And that is the pattern that we're seeing here for January 22, 19th, 5th, and April 16th, especially if they expected GameStop to go bankrupt by the 16th, right? They would have had all of these options out here not covered. And that would give us pause to think, well, when is this going to actually hit the fan? When is this poopy business going to hit the fan here? Time flies by, and by the time January 22 hits, your puts are now deep out of the money and your naked calls are bleeding money. Boom, those all expire. Monday rolls around and the timer starts. 2 days pass by, T+2, and now it is Wednesday, January 27th. You might have noticed today is Wednesday, April 21st. Your shares must be located and delivered. If they were naked, if they're out of 100 shares, you only have 0. Well, in that sense, you're going to have to buy 100 shares at market value, whatever price it is. Maybe it's here, right? Maybe it's here. Right? Whenever T+2 happens, you're going to have to buy at a loss. So now remember what Robinhood did? They shut down buying because the buy pressure at the time, coupled with option expiration, was about to ignite everything. And everybody basically agrees that Robinhood was the major reason why the squeeze did not happen back in January. Things died down, it was looking more promising, but the price was still way too high for the shorters at greater than $40. February 19th, 2021 arrives. Once again, their puts expire deep out of the money and naked calls bleed money. So Monday rolls around, the timer starts ticking, T+2 hits again. Once again, guys, we don't have to read all of this to understand that this is the pattern that is starting to emerge. We see that each of these is an option for GME to start making major rips. All of these 4 option dates will all result in a T+2 bomb igniting on the Wednesday following expiration. So we've seen this, right? This also explains the story for March 5th, 2021. Options expire, Monday arrives, the timer ticks, T+2 of Wednesday, March 10th, things are going up. This is it. They were excited as heck that day. Then suddenly a flash crash snapped the price down, and they believe this was coordinated by the members of the DTCC in order to provide more time to get rules in place. They did not want this to ignite prior to April 21st. We've read DD about this as well. That's why there's a pending lawsuit against the DTC. Even though we think the DTC is on our side, well, they might be starting to try and switch sides to us. But back then, they definitely didn't have all of the pieces of Exodia, the spiritual guardians, in place just yet to fight Ganon. Now, we're sitting on April 20th, 2021. Remember, the shorters most likely put the majority of their ammo in April 16th, 2021 options because that was the best possible date to bet on bankruptcy. It was also probably the last of their ammo because there's no reason to bet on a date past April 16th. April 19th, the clock started ticking once again. T+1 just passed by. Today is T+2. Wednesday, April 21st, 2021. We saw much activity over the weekend at Citadel, right? Citadel with its lights on. If you saw that video, banks around the world at 3 a.m., a bunch of banks just working overtime to try to do something that they couldn't do at home, like, virtually in pajamas. They had to go to the banks at 3 a.m. There's a guideline to banks and members of DTC to have liquidity for their positions that were loaned out by April 22. If things ignite at close of market or close to market close, then April 22 date makes sense. Have liquidity before market open of the 22nd. Supposedly, Bank of America and others have emergency shut down their U.S. branches as of close of business today, and we saw that as well. They must be preparing for something today, right? We might see stability throughout the day until around 1.5 hours before market close. Then rockets. So, sharing this right now. If you are seeing the volatility right now, because it's close to 1.5 hours before market closes, this is not only expanding your financial education brain, but hopefully this gave you a better understanding of what we are making sure we're taking a close look at in the GME and AMC saga. So I hope you guys enjoyed that video. Make sure to slam that like if you did. And if you want to support the show, the Gorillionaire, Meatball the Space Legend tier, and the Moon Platoon are right there waiting for you. That join button next to the subscribe button will do it, or heading on over to Patreon. And for now, but not for forever, have a nice day. Peace.